areas of our syllabus. One is relating to audit report that we have completed. The other area is ethical and other professional issues. Ethical and other professional issues that we are going to start today. And then there will be third area, audit planning and audit risk. And then we are having non-audit engagements. Then matters to be considered, plus procedures are evidence. So mainly we need to cover these four areas. Matters plus procedure evidence will be automatically covered along with different questions. So audit report area we have covered. Now we are moving towards ethical and other professional issues. So let's start chapter 1. Regulations. We are going to discuss about audit regulations. What does mean by regulations? What is meant by regulations? Audit regulations, standards, laws, rules that being auditor we need to follow. And there are certain laws, there are certain standards, there are certain rules that being auditor we need to follow. If we are following those rules, this means we are behaving like a responsible auditor. And through these rules, through these laws, standards, body will be able to monitor our work. If these regulations mean standards have been defined for auditing, what could be the reason behind this? In why audit regulations have been defined? Why auditing standards? Why auditing laws have been defined? It provides a guidance to the auditor. Guidance means auditor will be able to understand what is necessary, what is unnecessary, what he should do, what he should avoid. What else? To achieve consistency, so that all auditor must be working in the same manner. If everybody is following standard, this means they are conducting audit in the same manner. To achieve standardization. Standardization. Remember standardization. To maintain quality of the work. To maintain quality of the work, or to avoid what? Collapses. Like Enron. So that we can control the auditing profession to avoid some kind of corporate collapses that happened in the past. There are some rules, some standards that have been defined even more stricter than before, so that we can limit the auditor, so that we can control the auditor properly. There are three types of regulations. Self-regulation, independent regulations, and international regulation. In how auditing profession is regulated, there are three types of regulation: self-regulation, independent regulation, international regulation. What is self-regulation? The auditing profession is regulated under government of the country. In each country, government have defined some standards, some laws, some rules to govern the auditing profession in that country. In fact, government assigned his authority to a particular body to monitor the working of auditor in that country. Like in UK, if we see, government have assigned authority to ICAW, ACCA, so that they can define standard, they can monitor auditing profession in the UK. In similar manner, they have assigned the authority, government have assigned the authority in India to Institute of Chartered Accountants in India. They should define some standards, they should define some laws to regulate auditing profession in the country. So if country government or any government body is regulating auditing profession in the country, so that is called self-regulation. But there come some problems, some issues. Some countries' government working properly. They monitor the auditing profession, not only auditing profession, other professions in proper manner, while some country governments are corrupt. Even corruption involves in every profession. So they don't govern the profession properly. If suppose ACCA members are working in UK, they are governed properly under government over there. But if they are working in other countries like Bangladesh, India, Pakistan, Burma, Nigeria, Ghana, Africa, they are not monitored, they are not governed properly because the political system is corrupt over there. So what happened? Everybody, every accountancy body started regulating their professionals, their members by themselves. This is called independent regulation, mean body-wise, professional body-wise. Like ACCA has defined some ACCA codes of ethics that every ACCA member need to follow, whether they are performing in UK, whether they are performing in India, whether they are performing in UAE, whatever part of the world they are performing, they will be monitored, they will be governed according to ACCA rules. If a body monitoring or governing their members, their profession, that is called independent. Again, there are some problems. Nowadays, big organizations are multinational, having multiple branches all over the world. Now suppose one company who's having one branch in UAE, one branch in UK, one branch in USA, one branch in Canada, one branch in India. If we see according to self-regulation, every country is having different rules. Auditor performing audit, conducting audit in India in different ways, in USA different way. While the company is the same, operating all over the world, multinational. If we look at body-wise, suppose in India, who are the auditor? Member of ICAI. In UK, who are the auditor? Member of ACCA. In Australia, who are the auditor? Member of CPA Australia. If there are different rules body-wise, again, there is no consistency, there is no harmonization. So what happened? There is a body in America called IFAC. He called all the bodies around the world, all the accountancy bodies around the world, and tried to convince them, if we are operating globally, multinationally, the rules, the standards should not be different country to country and should not be different body to body. We must follow the same rules all over the world. And they convinced almost all professional bodies working around the world, even ACCA, even ICAW, even ICAI, even CPA, we should follow the same standards. We should follow the same international standards. And then the compliance of international standards started. In fact, IFAC, there is a board whose name is IASB, International Accounting Standard Board, whose role is to issue IAS, IFRS, and now everybody around the world, even though ACCA, ICW, ICI, they are following international standard. Who is defining international standards? Board IASB, who is working under IFAC. So IFAC has established a board, International Accounting Standard Board, whose role is to issue IAS, IFRS. He has also another board called IAASB, International Audit and Assurance Standard Board, whose role is to issue ISAs, mean International Standard on Auditing. ACCA is a member of IFAC. ICAI, Institute of Chartered Accountants in India, is a member of IFAC. ICW is also a member of IFAC. This means those bodies member need to follow what? IFAC standards, because your professional body is member of IFAC. So whatever the standards of IFAC, being a member body, we need to follow that. So who is defining ISAs? IAASB working under IFAC. So who define auditing standard? IAASB. When IASB is going to define any auditing standards, along with auditing standard ISAs, they define IAPS as well. And when they are going to define any new auditing standard, they also publish or issued what? IAPS. IAPS stands for International Auditing Practice Statement. International Auditing Practice Statement. What is IAPS? IAPS, in fact, is a guideline. Or help book regarding how to comply the standards. So whenever IASB define any new auditing standard, they also issue IAPS, mean guideline help book regarding how to comply that new auditing standard in practice. So under IFAC, there are two boards working, IASB to issue accounting standards and IASB to issue auditing standards. Under IFAC, there is another body working whose name is TAC. TAC stands for Transnational Audit Committee. Transnational Audit Committee. Transnational Audit Committee, whose role is to help the auditor in transnational audit. What is transnational audit? Transnational audit. Audit work performed beyond the jurisdiction of one country is called transnational audit. In simple word, international audit. If you are going to conduct audit in other country, according to their laws, according to their rules, because laws, corporate governance arrangements could be different in other countries. And if auditor is facing any issue in transnational audit due to different laws of other country, they can take help from TAC. TAC is also called FOF. Stands for Forum of Firms. Mean who are the members of TAC? Representative of a big firm around the world. They are voluntarily available there to help the auditing profession in case of any issue in transnational audit. I mean, obviously, if we have learned auditing, we have practiced auditing in one country, we know how to conduct audit in that country. But if we are going to perform audit of any multinational subsidiary who's operating in other country, so other country law, regulation, standard even could be different. And if we are facing any challenges, any problem, how to audit according to different laws, different regulations. So we can take help from where? TAC, Transnational Audit Committee, who are member of this committee, representative of different firms around the world. And this TAC is also called FOF. FOF stands for Forum of Firms. Forum of Firms means platform of firms representative, who are voluntarily available over there for auditors' help. So what we have discussed, what is auditing regulation, why there are regulations for auditors? There are three types or three ways in which auditing profession can be regulated, self according to government body, independent according to your professional body, and international under IFAC through compliance of international standards. And under IFAC, there are two boards working, one for accounting standard, one for auditing standards, as well as TAC is also working under IFAC. It's also a forum of firms that is there to provide help to the auditing profession, especially in transnational audit. What is transnational audit? Performing audit work beyond the jurisdiction of one other country. This is called transnational audit. Okay, let's move forward. Let's move towards one more topic called Clarity Project. Clarity Project. We discuss about ISAs. Before December 2009 and after December 2009. Before 2009, these ISAs were principle based. After December 2009, their nature have been changed and now they become rule based. The difference between principle based and rule based approach? We have studied in SBL. We have studied in PT paper as well, the very first paper of ACC. Rule-based approach is an approach like there are some rules that you need to follow. This is called strict legislative approach. There are some rules like law you need to follow. If you don't follow, you will be facing fines, penalties. Strict legislative approach is called rule-based. Principle-based approach, flexible approach, also called comply or explain approach, mean there are some rules that you need to follow. But if you are unable to follow any of the rule, you can provide explanation, justification, and that will be acceptable. If that is genuine, mean you can explain a reason why you haven't followed the rules. Mean there is some flexibility. So before 2009, these auditing standards were principle based. And the wording of standard was auditor should do this. Auditor should do this. And due to that word should, some auditor was following all rules of the standard. Some auditors are following half rules of the standard. Some was following even less than half and providing justification for other rules. If body is going to check who is following rule, everybody is following. If there are 10 rules of the standard, one audit firm is following 2 rules, for other 8, they have provided justification. One audit firm following 8 rules, for 2, they have provided justification, both are complying. Body was not able to check who is complying properly. And after December 2009, they changed the nature of auditing standard. They changed from principle based to rule based, mean they changed the wording. Auditor shall do this. Shall do this, mean auditor have to do this. There is no leniency. If you are not doing this, you are not following these rules, ultimately you are not complying the standards. In that case, you will be facing imprisonment, fines, penalties. Now, this rule-based approach is having some advantages as well as disadvantages. What are the advantages of rule-based approach? Now it is clear to the auditor, mean there is a clarity what they need to do and what they don't need to do, in what they need to perform. In principle based, they were not clear. Either they need to follow all, either they need to follow 10, either they need to follow 5, either they need to follow 2. There was no clarity. Now there is clarity. These are the rules. You need to follow all. There is harmonization. Harmonization means similarity. Every auditor is complying similarly. Previously, some auditor following 2, some auditor following 8 rules. Now similar rules everybody is following. Now it is easy for the body to perform check and balance. Who is complying and who is not complying? Who is performing quality audit, mean complying with the rules, who is not performing quality audit, mean not complying with the rules. There is easy check and balance. What could be the disadvantages? What could be the disadvantages? When you have defined strict rules, might be you have defined strict rules according to the situation of a normal company, like a proper size company. And if we are going to conduct audit of a small company, whose account balances can be verified even by performing 2 procedures instead of performing 10 procedures. So there is issue of over compliance, over auditing. In a small company having minimal account balances, and that minimum account balance even we can verify by applying 2 procedures. But standard is saying no, you need to perform 10 procedures. So 8 procedures we are performing unnecessarily. So there is over auditing, wasting time. And if we are going to conduct audit of a complex business structure, might be we need to perform even more detailed procedures. But this rule-based approach standard you have defined according to a normal company. So there is issue of under auditing as well. We need to verify more things, but standard is not allowing. Through 10 procedure, it is difficult to verify complex structure. Might be we need to perform 5 more procedures, but standard is not allowing. So there is issue of under auditing as well. And there is one more issue. When it was principle based, auditor was performing some procedures, and for other that are not necessary, he is providing justification. And while providing justification, he was trying to understand why this rule is there, why this procedure is there, what is the purpose of this procedure, and what should be acceptable justification. And he was trying to understand the standard properly. He was learning through the rules of the standard. Now, what he need to do, he just need to perform without understanding why this rule is there, why this procedure is there. Mean now there is a stop of self-learning of the auditor. Auditor is not learning from the rules, not learning from the standard, not trying to understand the standard, why this procedure is there, why we need to perform this. He is just performing blankly without understanding why it is necessary. Means self-learning of the auditor has been stopped. So there are some advantages of rule-based as well as disadvantages. There was some impact of this rule-based approach as well. Impact on auditing profession. And when the standard has been changed from principle-based to rule-based, there was some big impact on the auditing profession as well. What is the big impact on the auditing profession? Previously, if there is a standard having 10 rules, 10 procedures, auditor were conducting audit by performing 4 procedures, and for other 6, always he tried to provide justification explanation. I mean, his team was aware, okay, we need to perform these 4 procedures. How to perform these 4 procedures, they were aware. Now, team have to follow the other 6 procedure as well, but they don't know how to follow, how to perform. This means we need to train the auditors. So training need of a firm has been increased. Not only training need, training cost has been increased. If previously we were conducting audit by performing 4 procedures we could have performed in 4 hours. Now we need to perform 10 procedures. That require more time. More time we need to pay to the staff, more cost. So that more cost mean audit cost has been increased. And that audit cost we are charging to whom? To client. And through this, what happened? Audit fee has been increased. And if we try to charge more fee to the audit client, we ask to the client for more fee. We cannot say previously we were following 4 rules, now we need to follow 10 rules. Otherwise, he will be in suspicion. This means previously you are not conducting quality audit. So we cannot explain to the client why we are charging more fee. The moment we ask the client more fee, he started changing his auditor. So there was some big disturbance in the auditing profession, in the auditing industry. Because audit firm training needs, training cost has been increased, audit cost has been increased. We try to charge more fee to the audit client. So they started changing their auditors. So there was disturbance in audit industry as well. So this was a small topic, clarity projects. Now we have completed chapter 1. Chapter 9 and chapter 14 we have already completed based on audit report. Now let's finish chapter 2. Chapter 2 is about law and regulations. Not auditing laws and regulation, company law and regulation. Company law and regulation. That company need to follow. Who is responsible for complying with the company law and regulation? Company management. Not auditor. Who is responsible for complying with the company law and regulation? Company management. And to comply with the law and regulation, what they need to do? They need to maintain a register. Maintain a register mean in our register, they need to write down these are the laws, regulations that we need to follow so that they can communicate to their staff. To comply with the law and regulation, they need to implement internal control system in the company. In policies, procedures, they need to follow. To ensure compliance with law regulation or an effective internal control system, they should review internal control system. And for that, they must be having internal auditor. Company need to establish audit committee of non-executive director so that audit committee can ensure compliance with law regulation. They can help the management in complying with law regulation. If company management is not complying with law regulation, is there any issue for us being auditor? What? But what is our responsibility? To express opinion on the financial statement. What is our main responsibility? To express opinion on the financial statement. We are having concern with financial statement. If company is not complying with law regulation, is there any issue for us? If company is not complying with law regulation, there is a present legal obligation from past event. So there must be accounting per IAS 37. Either provision or contingent liability. And suppose company is not disclosing with this non-compliance or not accounting as per the non-compliance, there could be chances of misstatement in the financial statement. There could be chances of Misstatement of financial statement. Company haven't complied some of the laws and they faced penalties from the government body. And these penalties not reflected in the financial statement. Even we are not aware about this non-compliance. But financial statements are true and fair or false? False. But how we can say these are false if we are not aware about this non-compliance? So that's why it is auditor's responsibility regarding company law regulation. What? For ISA 250. ISA 250, auditor's responsibility relating to laws and regulations. We need to perform some procedures. Every audit. We should obtain understanding about the law regulation required for the company. What are the law regulation required for the company? We should obtain a knowledge and start the audit. Not only we should obtain a knowledge, we should make sure that we should take evidence that company is complying with the law regulation. We should make sure company is complying with law regulation. We should make sure if company need to take any license, they have obtained those licenses. So we should obtain knowledge about law regulation. We should understand or assure ourselves companies complying with law regulation. And we should take evidence not only relating to compliance, mainly we need to take evidence relating to non-compliance with law regulation. Because if a company haven't complied with law regulation, ultimately financial statements are misstated. How we can prove these are misstated? Based on evidence. So that's why we need to obtain evidence relating to non-compliance rather than compliance. As well as we need to make sure if there is need for any license, company have obtained the license. And we must be aware throughout the audit to identify any issue of non-compliance. And at the end of audit, we must obtain written representation from management that all non-compliance with law regulation has been disclosed to the auditor and in the financial statement. So what are the auditor's responsibility relating to law regulation per ISA 250? We must obtain understanding, knowledge about law regulation compliant for the company. We need to assure compliance. We need to take evidence of non-compliance. I'm going to write down here. So knowledge about law and regulations required. Assure. What's the spelling of assure? ASSUARE. Assure compliance and take evidence of non-compliance. As well as we need to make sure licenses has been obtained if it is required. Because if a company is working without licenses that was required, so that is also non-compliance. And we should remain alert, maintain our professional skepticism throughout the audit relating to non-compliance. Remain alert during audit regarding any indication of non-compliance. And at the end, we should obtain written representation regarding disclosure of non-compliance to the auditor as well as in the financial statement. So these 5-6 procedures we need to learn are ISA 250. What is auditor responsibility relating to law regulation? And we can say this NOCLAR as well. NOCLAR stands for non-compliance with law and regulations. ISA 250. So we have studied IBC 250 as who is responsible for law regulation, why we are having issue with non-compliance law regulation, and what procedure we need to perform. Now, if we have identified any non-compliance with law regulation, to whom we should report? To management, board of director, audit committee, so that they can reflect in financial statement. If they do not reflect, then we can communicate to shareholder by qualifying audit report if there is material misstatement. Though it is not our responsibility to report client matters to third party, but in case of law regulation, it is our legal duty. Like if non-compliance with law regulation is relating to money laundering issue, we should report to any legal body as well. So if we have found any non-compliance with law regulation, to whom we should report? First to company management, so that they can reflect in financial statement. If they haven't reflected, we will communicate to shareholder through qualification of audit report. Whether auditor is having any responsibility to report to third party? No, we need to maintain confidentiality. But if any law requiring, like in case of money laundering legislation, we need to report to any of the legal body, so we should report. If we are not reporting, we will also be found guilty. We'll be facing penalties from the legal bodies. So let's move towards one more topic called money laundering. What is money laundering? Money laundering. Money laundering is a process of converting black money to white. Black money means illegal, dirty money. Into white money mean legal money. So money laundering is a process through which we convert black money mean illegal money, the money that is generated from illegal sources, into white money that is called money laundering. What is money laundering? There is one term called tax saving. Other term is called tax evasion. This tax evasion is called money laundering. Tax saving is allowed. According to rules, you are saving tax, that is allowed. Tax evasion, beyond rules. With non-complying the rule, if you are trying to save the tax, that is not tax saving, that is what? Tax evasion. Criminal act, that is also money laundering. Money laundering is what? Taking illegal possession of others' property. Taking illegal possession of others' property, that is also money laundering. Tax evasion, you are trying to take possession of government money. Because you are not saving tax according to rules, beyond rules. With non-complying the rule, you are trying to save the tax. So that money that you have saved in tax evasion, that is was property of government that you have taken in your position illegally. So that is also called money laundering. And in UK, we are studying ACC. ACC is based in UK. In UK, money laundering is considered as a criminal act, serious criminal act. And there is up to 14 years imprisonment for the money launderer. That's why in UK, they have defined UK anti-money laundering legislation. UK anti-money laundering legislation. ML stands for money laundering, UK anti-money laundering legislation. And according to UK anti-money laundering legislation, an accountancy business or audit firm need to follow some procedures. Accountancy or audit firm, they need to follow some procedures according to UK anti-money laundering legislation. What are the procedures that we need to learn? According to UK anti-money laundering legislation, every accountancy firm, audit firm, they need to appoint a person in your firm as MLRO. MLRO stands for Money Laundering Reporting Officer. In every firm, must nominate one of your person in the firm as a MLRO. Like if during audit, we have found our client is involved in money laundering. This we need to report to any legal body. Who will report to legal body on behalf of the firm? MLR. MLR. So every firm must be having a person as MLRO who will communicate money laundering issues to legal body. If we have found during audit our client is involved in money laundering, or even we have suspicion that there could be chances of money laundering, so we should report money laundering to legal body in UK, and the legal body in UK is called SOCA. Who is legal body to whom we should report money laundering? SOCA in UK. SOCA stands for Serious Organized Crime Agency. SOCA is what? SOCA is a financial intelligence unit of UK. What? Financial intelligence unit of UK. An intelligence body who monitor financial matters, financial frauds, money laundering in UK. SOCA is what? NCA, National Crime Agency of UK. They monitor national crime in UK, national crime even relating to money crime. So according to UK anti-money laundering legislation, an accountancy business audit firm need to follow some procedures. What procedure we need to follow? We should appoint a person in our firm as a MLRO. We should report money laundering, even suspicion of money laundering to SOCA, mean National Crime Agency of UK. We should train individual in our firm. We should provide a training to our audit staff. We should make them aware what are the issues that comes under money laundering. And if you are finding these issues during audit, to whom you should report. Because if our staff is not trained, they are not aware about money laundering, might be they are facing money laundering issues, but they don't know this is money laundering, so they are not reporting. They are not highlighting that. So we should train our individuals, our staff member, to make them aware what are the things that comes under money laundering. Not only we should train individual, we should implement internal procedures as well. Internal procedure implementation. Internal procedure implementation means we should arrange some monitoring arrangement of our auditing staff, so that they should not be involving themselves with the client in money laundering issues. There could be chances our staff have found any money laundering during audit, and the client is aware that auditor have identified, and they try to bribe the auditor and try to convince him do not disclose this. So we should implement internal procedures like monitoring arrangement on our staff, like they should not be involved in such kind of criminal activities with the client. Because if our audit staff is involved in criminal activities, they are supporting money laundering to the client. So ultimately, who will be responsible for that? Firm will be responsible for that. So according to UK anti-money laundering legislation, we should appoint a person as an MLRO. We should report money laundering to SOCA in UK. We should train our staff to make them aware about money laundering issues. And we should implement internal procedures within the firm, as well as we should avoid. We should avoid tipping off. We should avoid tipping off. What is tipping off? Providing the wrong information or holding a true information. We are aware our client is involved in money laundering. This means it is our legal duty. We should report to SOCA, but we haven't reported to SOCA. Mean we hold the true information. This is what tipping off criminal act. We should avoid. We are aware our client 4 directors are involved in money laundering. But while reporting to SOCA, we reported about 2. For other 2, those who are close to us, we haven't mentioned their name. This is also tipping off, providing wrong information. So what is tipping off? To hold true information, to provide wrong information, or what is tipping off? To provide information on wrong channel. During audit, we identified our client is involved in money laundering. We are having evidence there he is involved in money laundering. To whom we should report? We should report to SOCA. But instead of reporting to SOCA, we try to discuss with the client. Oh, we are aware you are involved in money laundering. Oh, what's going on, man? And we are giving him a chance to hide it or to bribe us to stop this reporting. So this is also called tipping off. So tipping off is a criminal act that we must avoid. What is tipping off? To hold true information, to provide wrong information, or to provide information on wrong channel. I mean, instead of reporting to SOCA, we have tried to report to client himself. I mean, we are going to give him a chance so that he can hide it. So this is also called criminal act that we must avoid. So according to UK anti-money laundering legislation, a firm must appoint a person as a MLRO. We should report money laundering to SOCA, even suspicion of money laundering to SOCA. We should train individuals, mean training of our audit team staff. We should implement internal procedures to monitor our staff. They must not be involving in money laundering. We should avoid tipping off, and we should obtain client identity. Client identity means we should perform client screening. Client screening means we should make sure the company is a legal company. They are performing legal transactions. Their representatives are legal persons. They does not include any of the wanted or illegal persons. As well as for PEPs, political exposed persons. We should perform some extra KYC or CDD procedures. KYC stands for Know Your Client. CDD stands for Client Due Diligence. I mean, if your client is any of the politician, there are always high chances of money laundering, because these politicians try to convert black money into white money through any of the legal business they have created. This business was not their need. Why they have established this business? So that they can convert their black money into white money by using transaction in this business. So you should always perform some extra detailed procedure regarding client identity. I mean, what is the source of their income, from where they are getting this money that they are putting in the business, where they are paying that money, what are the transaction, if they are paying any money, transferring any money to any party, whether it is a supplier, whether it is any expense for the business, we need to perform some extra due diligence, mean client screening, and we need to identify the source of client income. That is called know your client procedures. Because there are always high chances of money laundering in political exposed person, mean politicians. So these are the procedures that we need to learn. For UK anti-money laundering legislation, what procedures an accountancy firm or audit firm have to follow? What was money laundering? It is a process of converting illegal money, mean black money, into white money. If it is a process, so this process is having 3 stages: placing, layering, integration. Money laundering process is having 3 stages involved. In how the process of converting black money into white money work, it work in 3 stages: placing, layering, integration. What is placing? Putting, investing black money into a legal business is called placing. Placing means putting, investing black money into any of the legal business, either buying its shares. This is called placing. Layering, performing multiple transactions, mean putting more and more layers over that dirty money so that you can hide its true origin, so that nobody can detect from where this money was originated. I mean, performing more and more transactions to put more and more layers over that dirty money so that nobody can find the true origin from where that money was originated, especially through foreign transactions. In foreign transaction, we can easily hide true origin of the money. If money is moving from one country to other country, suppose there is country A, so money is moving from country A to B. So country B is a recipient who is receiving the money. Any of the recipient country never ever try to identify why this money is coming into the country, from where this money is coming into the country. Every country is happy that money is coming into the country. If we are receiving any money from someone, we never ever try to find out how he got this money. And he's coming to us, we are happy. So recipient country, do not try to investigate from what source this money is coming. They are happy, money is coming into the country. Now, the person will call back money from B to country A. Now, A, government will be happy, money is coming into the country. From what source it is coming, where it was originated, they will not try to investigate. So through this, the true region of money is properly hidden. So placing, putting, investing black money into the legal business, layering, performing more and more transactions to hide true region of the money, especially through foreign transactions. And then integration to withdraw that money from the business and use like a legal money because it is white now. So there are 3 stages: placing, layering, and integration. I think we have completed chapter 2 as well. Yes. Yes, we have completed chapter 2 as well. Let's move towards our question. So I'm having a question called LARC. In how this money laundering topic can be tested in the exam. We are covering this for other professional issues. So relating to law, regulation of client company, these are professional issues. Money laundering is what? Professional issue. Relating to profession, what we need to consider. So we're having this question mark. We need to cover. Yes, this part. So using the information in Exhibit 1 for 5 marks, using the information in Exhibit 1, discuss the implication of the circumstances. Implication means issues. And there are some circumstances described. You need to identify the issues in the audit senior note and explain the nature of any reporting that should take place by the audit senior. In where auditor should have reported this. 5 and 7 marks. So you are a manager in Lark & Company responsible for the audit of Heron Company and owner managed business, which operates a chain of bars and restaurants. This is your firm's first year auditing the client. And the audit for the year ended 31st March 2022 is underway. The following exhibit available on the left-hand side of the screen provides information relevant to the audit question. Audit senior note for your attention, and we need to discuss implication from audit senior note. This information should be used to answer the question requirement within the response option provided. Exhibit 1. When I was auditing revenue, I noticed something strange. Who is saying? Senior. So he noticed something strange while auditing revenue. What is strange? Heron Company's revenue, which is almost entirely cash-based, is recognized at 5.5 million in the draft financial statements. This is not strange. If you have seen 5.5 million revenue for the first time, it's your problem. Otherwise, normally companies are having more than this revenue. So this is not strange. However, the accounting system shows that till receipt for cash paid by customer, till in cash counter, in record of the sale showing amount only 3.5 million from customer company collected 3.5 million at cash counter, while in financial statement revenue is stated at 5.5 million, mean 2 million overstated. Yes, this is strange. Mean for 2 million revenue is overstated. Accounting system showing company sold goods for 3.5 million, while financial statement showing sales 5.5 million. Okay, this seemed odd. Yes, it is odd. So I question Ava Gul, the financial controller. Yes, we need to discuss with the accounting finance department why there is overstatement, why there is disparity. About this, she said that Jack Heron, the company's owner, deals with cash receipt and post journal dealing with cash and revenue. And he maintained the records relating to revenue. Who? Owner. Who is the same? Financial controller. Eva asked Jack, I asked him the reason for these journal, but he refused to give an explanation. He didn't provide any explanation to me. So you can ask him. Who is saying? Company financial controller. Okay. Revenue is overstated by 2 million. While auditing cash, I noticed a payment of 2 million made by the electronic transfer from the company's bank account to an overseas financial institution. While auditing cash, we realized that the company have transferred 2 million from his bank account to foreign country. Could be companies having some supplier in foreign country to whom they are making payment. The bank statement showed that the transfer was authorized by Jack Heron owner. but no other documentation regarding the transfer was available. What's the purpose of this payment? Nothing. Records. So now there is a suspicion. When the business is owner managed and controls are also weak, I mean, one person is holding everything, he is authorizing everything. So there are always high chances of money laundering. So there could be chances that 2 million, that is overstatement of revenue, while company sold goods for 3.5 million. So chances that 2 million has been invested into the business. So this is indication of placing stage of money laundering. And now the similar amount has been transferred from company bank account to foreign bank. That is giving indication of layering to hide to a region of the money that can be hidden in easy way through foreign transactions. Okay, let's see. Alarmed by the size of this transaction and the lack of evidence to support it, I think there was clear indication there is money laundering, like placing and layering. But due to size of the transaction, the senior is saying, I question Jack Herr. And he tried to discuss with honor me money launderer, asking him about the source of cash receipt and the reason for electronic transfer. Where you got this money? Why you are transferring this money? Who is asking? Who's asking? Senior. To whom? To the business owner. He would not give any answer and became quite aggressive. Who are you to ask me from where I got this money, why I'm transferring? This is my business. This is your fault. When you are having indication of money laundering, to whom we should report? Soka, if you are reporting to this client what you are doing, providing information on wrong channel. So we'll explain placing, we'll explain layering, we'll explain tipping off 2 marks, and what could be the nature of reporting for the senior, to whom he should report. He should report to the firm's MLRO, so that through MLRO it should be reported to SOCA in UK. He has discussed with the owner, the money launderer, having clear evidence there is chances of money laundering. So that was tipping off criminal act that should have been avoided. So we can discuss for 7 marks. Moving forward. So chapter 1, chapter 2, chapter 9, chapter 14, 4 chapters we have covered. There are total 14 chapters. Out of these 14, 11, 12 is no chapter. There are only 12 chapters that we need to cover. 4 we have covered. 8 chapter left we need to. Next cover one more chapter. Chapter 3. So we are covering ethical and other professional issues. Let's move towards ethical issues. Okay, let's have a break. Take a break for 15 minutes. After that, we'll discuss these ethical issues. So let's move towards ethical issues. What does it mean by ethics? Accepted level of behavior mean acceptable behavior. In being a professional, our behavior should be acceptable. We should show right behavior and we should avoid wrong behavior. And under certain circumstances, if we are unable to identify what is acceptable, mean right behavior, what is a wrong behavior, so ACCA has defined some codes of ethics. And by following these codes of ethics, we'll be able to distinguish between right and wrong behavior, mean we can move towards acceptable behavior. And these codes of ethics are also called fundamental principles that every accountant, every auditor, every ACCA member, even a student, they need to follow. There are 5 codes of ethics: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Integrity means an accountant must be honest. Accountant auditor must be straightforward. They must not be associated in passing false or misleading statement, mean they should always report true. They should not associate themselves with the wrong report. They should always produce true reports. So accountant must be honest, straightforward, and must not be associated in any kind of misleading or false statement. Objectivity means being auditor. Our main focus should be on the objective of our work. Mean our work should not be influenced by any conflict of interest, mean personal interest. Should not be influenced by undue influence of others, mean pressure of others. And we should always be unbiased, mean we should not moving towards biased behavior. Bias mean personal behavior. We must be fair in our work, mean our work focus should be on the objective of the work. It should not be influenced due to any personal interest, due to interest of other parties. We should not work under pressure of others. Otherwise, we will not be able to focus on our objective of the work. Professional competence and due care mean the work we are going to perform. We must be having the competence, means skills, experience, and knowledge relating to that work. If we don't have knowledge, experience, skills, we should not accept the work for which we are not able to perform. Not only we must be having a competence, mean we should maintain competence as well. How we can maintain, mean we should upgrade our knowledge. How we can upgrade our knowledge through CPD, continuing professional development. The work we are going to perform, we must perform with due care. Due care means being a client, the work what we are expecting, we should perform that work as well. Mean we should meet the expectation of the client. Confidentiality means during audit, if we are having any confidential information about our client business, so that confidential information we must not disclose for any personal advantage or advantage of any other person. Mean we should maintain confidentiality. If we are disclosing client confidential information, this means we are losing a client trust on our profession. And this will create problem for our profession as well. Like in future, client will not provide detailed information about the business. He will not allow access to the records. So ultimately will not be able to obtain sufficient appropriate audit evidence due to some limitations. So that's why to maintain trust of client on our profession, we must maintain confidentiality. Professional behavior mean we should show professional behavior. Professional behavior mean we should work according to law and regulation. If you are not working as per law, regulation, as per standard, ultimately will not be able to justify our work. So we should perform everything according to standard, according to law regulations, so that if anybody is asking, we can justify. We should not make exaggerated claims. I mean, we should not say we are the most professional. This means only you are the professional, other accountants are not professional. We must not say we are the leading accounting, auditing, providing in the country. No, if you are having 2-3 offices, you are not the leading. So we should avoid exaggerated claims. Exaggerated claim, we should not say we will provide guarantee that we will save your tax. There is no guarantee for saving. We can save tax according to the rules. If according to rules we are unable to save, we cannot. So we should not provide guarantee to the client, because we do not perform work on guarantee. We provide assurance, even reasonable assurance in audit. And we should not make disparaging remarks against other professionals. We should not say like that firm is not working properly, we will perform quality audit. If that firm is also ACCA members to whom you are denigrating your profession. I mean, we should behave professionally. We should not perform any of the act that will provide a discredit to our profession. We should work according to law regulation. We should avoid exaggerated claims, and we should not provide negative remarks against other professionals. So as per ACCA Codes of Ethics, being a professional accountant auditor, we should follow these 5 codes of ethics: integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. We should not disclose client confidential information that we have obtained during the audit for our personal advantage or advantage of any other party. But there are 5 exceptions where we can disclose confidential information. We can disclose confidential information if we are having permission from client. If client have provided you permission, okay, you can disclose, you can use this information, so we can disclose. But make sure that permission must be in written form. Otherwise, in future, after disclosing information, if client lost something, he can sue you for damages. So you must be having a proof, you must be having evidence you are having the client permission to use this information. We can disclose client confidential information if it is legally required. Like in case of money laundering legislation, if we are having even suspicion about the money laundering, we should report to SOCA. Obviously, reporting to SOCA, we are disclosing client confidential information that we got during the audit. So if it is legally required, we can disclose. We can disclose client confidential information if it is required by court. Our audit client is having any litigation in the court, and the court has ordered us. Being a witness, you are having detailed information about this client. So being a witness, you need to provide this information. And if court is asking any information from us relating to client, we cannot deny to the court. We must provide the information required by the court. We can disclose client confidential information if to disclose that information is in public interest. What is public interest? Best for most, best for society. Best for most or best for society. Suppose we are conducting audit of a client, that is say a company who is operating in chemicals, and during audit we noticed our client is disposing chemical waste into the local river, and that is dangerous chemical waste where they are disposing into the local river. If they are disposing into the local river, not only they are affecting the living animals on the rivers, we notice the water of that river is also used by the local population surrounding the river. They are using that water in their normal drink as well. Though there is no legal duty, but it is our ethical duty. If any client is acting against public interest, so we must whistleblow. Whistleblowing is a term. Any unethical act that is against the public interest, we should highlight to whom? To any of the regulatory body, to any of the local body. So it is our ethical duty, it is our professional duty. If client is working against public interest, we should highlight this to any of the body, to any of the regulatory body. Highlighting to any of the regulatory body is called whistleblowing. So where we can disclose client confidential information, where client have provided us a permission, where it is required by law, not legal required, we can say law required that, like in case of money laundering legislation. When it is required by court, when it is in public interest to disclose, we can disclose confidential information if it is in auditor professional interest. Auditor's interest. What could be in auditor's interest? Is a term called QCR, quality control review. Auditor work quality is monitored by his professional body. Like ACCA will monitor our work quality. How they monitor our work quality? By review of our working papers. And if we are submitting our working paper to our professional body for quality control review, ultimately in those working paper, we are disclosing client confidential information to our body. But this is in auditor professional interest. This is part of a regulation of the auditing profession. So here we can disclose client confidential information because this is in auditor professional interest. We can disclose confidential information in case of any litigation with the client. Like client is not paying our previous fee of the audit. There was some matters we haven't performed as per client wishes. We performed as per the standard, as per the laws, but client is not happy with that reporting. So he is not paying our previous fee. So recovering fee is our professional right because we have performed the work. And to recover that fee, if we have a file a suit in the court and court is asking any detailed information, in that detailed information, even if we need to disclose any of the confidential information, we can disclose because this is in auditor professional interest, not personal interest. Professional interest we can disclose. So we need to maintain confidentiality. We should not disclose client confidential information for our personal advantage or advantage of any other party. But there are 5 exceptions where we can disclose, where client have provided us permission, where it is required by law, like in case of money laundering legislation, when it is required by court as a witness, when to disclose information is in public interest, so we can whistleblow. When to disclose information is in auditor professional interest, not personal, professional interest, so we can disclose. Ethical issues we are discussing. So auditor should maintain independence. How auditor can maintain independence? By following the objectivity principles. Mean our focus should be on the objective of the work. Our work should not be influenced due to personal interest or interest of other party. So an auditor must be independent. But it is very difficult to maintain independence because there are some threats on auditor independence. There are some threats on independence. What we need to do to maintain independence, we need to reduce these threats to an acceptable level. If we are unable to reduce, we should avoid. What are the threats? How we can reduce? How we can avoid? Let's discuss. And this is the main topic relating to ethical issues. So auditor is facing 5 types of threats on his independence. Self-interest threat, self-review threat, advocacy threat, familiarity threat, and intimidation threat. Self-interest, self-review, advocacy, familiarity, and intimidation. Self-interest threat arises where we, being auditor, are having any personal relation with the client, any financial relation with the client, financial interest with the client. Like the company to whom we are going to audit, we are also the shareholder of that company. We are also the employee of that company. So being a shareholder, being an employee, we will never ever provide opinion against that company. Why? Otherwise, we'll be losing our employment. Otherwise, we'll be losing our investment. So this could create self-interest threat. So if you are a shareholder of any company, you are employee of any company, you should not conduct of that company because this threat cannot be reduced. You need to avoid. Self-review threat arises if we not only providing audit services, we are not conducting only audit, we are also providing accountancy services to the client. This means the financial statements that we are going to audit. Who has prepared that? We ourselves. This means we are going to check on performed work. If we are going to check on performed work, we know these financial statements are accurate because we have prepared. So we'll not perform procedure as per auditing standards. We'll perform limited procedure. We will not perform audit. We will just review the financial statements. Okay, this is audit verified. So this is called self-review threat. Self-review threat means where you are going to check your own prepared statements. So you'll not be able to perform detailed procedures because you know everything is accurate. Why you is performing detailed procedure? You will only review that. So to avoid this threat, we must maintain Chinese walls. Chinese walls means separate team for audit and separate team for other services. Chinese walls, separate team for audit, separate team for other services. Advocacy threat arises where we are representing a client in a court case. Court haven't ordered. On client request, we are representing him in court case. We are trying to convince the court in favor of the client. This means today we are representing the client. We are talking in favor of the client. So tomorrow might be we will hesitate to provide opinion against this client to maintain our repute. But public will say, yesterday you are representing the client. And today you are saying they are not good people. They don't prepare proof financial statements. So we can hesitate by providing opinion against the client. So we should avoid representing the client anywhere because representing client company is a function of company management, not auditors. Who should represent company anywhere? Management, not auditor. So be in your limit. Do not represent client. Do not perform any of the management level function. If being auditor, we are performing any of the management level function, then we are facing advocacy threat. That is also called management threat as well. Familiarity threat, if our close family member is employee in the client and he is involved in accounting and finance department, mean involved in preparation of financial statement. This means we are going to conduct audit of the financial statements or of the work of our close family member. It could also influence our independence. It could also influence our professional skepticism. Will not be evaluating the financial statements critically. We might be losing our critical nature. So that's why if our close family member is involved in client company whose work is going to be reviewed by us, we should avoid conducting audit of that client. We should not be associated. We should not be part of the audit team. We should send any other auditor instead of ourselves. Intimidation threat, if auditor work is pressurized. Or there is any fear on auditor. Don't provide opinion against the company, otherwise we will do dash, dash, dash with you. So we should not work under pressure. We should not work under fear. We should try to resolve that pressure, that fear by discussion with the audit committee. If still that pressure is unresolved, we should consider withdraw from the engagement, resign from the audit. Because if we are working under pressure, ultimately not only we are affecting our independence, we are affecting our objectivity as well. We are affecting our integrity as well. Might be in pressure, will be associating ourselves in wrong reporting because we are under pressure. So that's why we should not work under pressure or fear. Try to resolve that pressure or fear by discussion with audit committee. If still unresolved, withdraw from the engagement. So auditor should maintain its independence throughout the audit. If there are any threats on independence, he should try to reduce these threats to an acceptable level. If unable to reduce, we should avoid. How we should avoid? Do not perform the work. So let's discuss some more examples of these threats and discuss how they can be overcome. So self-interest threat arises due to personal interest. Personal interest means we are employee of the client company. This is what personal interest. We are involved in any of the trading relation with the client company. So this could affect our audit work. So we should not conduct audit of any client where we are having personal interest. This cannot be reduced. We should avoid. Self-interest that arises due to financial interest. Due to financial interest. Financial interest. You are shareholder of the client company. Being a shareholder, you will always see best profit. While being auditor, we need to see true and fair profit. This could affect our independence, our objectivity. If client haven't recorded any of the expense, we will say, okay, because this will result into more profit, more dividend. We should not perform work of any client where we are having shareholding. If we want to retain shareholding, we should resign from the audit. If we want to continue audit, we should dispose of the shares and should not perform the work until share has been disposed of. Financial interest arises if we are indebted to the client. Indebted means we have provided a loan to the client company or we have received a loan from the client company. Even in that case, it could affect our independence objectivity. We should not conduct the audit. Not only loan we have provided or received, even if we have provided guaranteed against the loan, even in that case, there is a financial interest. We should not conduct the audit. Financial interest arises due to overdue fee as well. Overdue fee means we are conducting audit for so many years. Previous year fee, audit fee is still pending. We haven't received that. That is what overdue fee. Previous year fee as well as current year fee. This will be huge amount. If we are unable to please our client, we will not be able to recover that fee. Might be we will lose this fee. So this will also affect our independent subjectivity. What we should do? The previous fee should be recovered or resolved before starting the next work. We should not start the next work until previous fee is resolved or recovered. Self-interest threat arises due to fee dependency. Fee dependency. What is this fee dependency? Suppose we are having a firm. Our firm name is ABC Firm. We are having different clients. We are having 4 or 5 different clients. And our total annual income is say $1 million. This is our total annual income from all the clients. If 15% or more of this total annual income is coming from one client, this could create fee dependency issue, self-interest threat. This is our major source of income. We'll never ever try to give opinion against this client. Otherwise, we'll be losing our major part of income. And normally this happens when you are providing audit as well as non-audit services. So what we need to do? The fee from one client should remain below 15% of the firm's annual income. And to remain it below, what we need to do? We should stop providing some of the non-audit services so that we can reduce this threshold below 15%. But suppose our firm is new. We are having 3 clients. Might be from one client, 70% of our income is coming. In that case, we can justify. A firm is new, firm is growing. As the client will grow, this will automatically reduce. That is justified. But if suppose our firm is old, we are operating from last 10 years. And from one of our client, we are receiving more than 15% of annual income. For 1 year, it is justifiable. We can say this is temporary, current. In next year, we will take some steps to reduce it down. I suppose we have provided this justification in previous year. Now, in consecutive 2 years, it is not acceptable. So in that case, either we need to stop providing some of the non-audit services, or there is another option, we can merge with the other firm. Suppose there is another firm, XYZ. Their income is also 1 million. So what we can do, we can merge with that firm. Now this total income will be 2 million. This 15% will reduce to 7.5%. This will not only providing help to us, might be they're also having similar issue. So they can get benefit through merger as well. So self-interest threat arises due to personal interest, due to financial interest, due to fee dependency. Fee dependency where 15% or more of our total income is coming from one client. So what we need to do? We should stop providing some of the non-audit services so that a fee from one client should remain below 15% of our annual income. Self-interest threat arises due to undue hospitality. Undue hospitality. Receiving gifts free of cost or discounted price products from the client. Receiving entertainments from the client. Enjoying lavish dinners from the client. This is what undue hospitality. We should not accept this. Because if client is showing that much care for us, ultimately due to human nature, we will also try to show care for the client. This could affect our professional skepticism, critical nature. So we should not accept the undue hospitality. Minor hospitality is acceptable. We are visiting the client, he's offering tea, coffee, cold drink, that is fine. But significant hospitality, significant means receiving gifts, taking goods on discounted prices or free of cost, receiving lavish high teas, dinners, entertainments, that is significant hospitality. We should not accept this. This undue hospitality not only creating a self-interest threat, it is also creating familiarity threat, mean like a close friendly relation with the client, caring relation with the client. So we should not accept significant hospitality. Minor is acceptable. That comes under manner. If he's offering tea, coffee, cold drink, that is comes under manner, so we can accept that. But significant, we should avoid. Self-interest that arises due to referral fee or commission. This is referral fee or commission. We were conducting audit of one client, and client has asked, I need to buy a new accounting software because this software is useless. Do you know any of the software house from where I can buy a new accounting software? We say, yes, that ABC software house, they produce brilliant software. Our previous 3 clients have bought from them and they are very happy. They are very satisfied. If you can buy accounting software from them. So client approached that ABC software. They signed a contract. They bought the software from them. Afterward, we approached to ABC software. We referred you a client. Where is our commission? This commission is allowed, not disallowed. But this, we are getting an additional income by having a relation with this client. Self-interest threat. How to reduce this? We should inform the client, like by referring you to that software house, we are receiving this much commission. If client is not aware about this, then we are having some additional income from this client, then it creates self-interest threat. Self-interest threat arises due to contingent fee or percentage fee. Contingent fee or percentage fee. What is this? We are conducting audit of this client from last so many years. This year, client is saying, I want to increase your audit fee. Okay. But I'll give you more fee as the increase in my profit. If my profit is increasing by 100%, I will give you double fee. If my profit is increasing by 50%, I will give you 50% more fee. The more profit I will get, I will give you more audit fee. This is what percentage fee. This could also affect our objectivity. If client haven't recorded any of the expense, if client have overstated the income, who will say, okay, why? This will result into more profit will result into our more audit fee. So this is affecting our independence, subjectivity, mean our work is influenced, is under pressure of the client profit. If he's having more profit, we'll be having more fee. If he'll be having similar profit, we'll be having similar fee. So we should not work on percentage fee. We should not work on contingent mean fee relating to deciding in future. We should always work on fixed fee and decided before starting a work. Otherwise, we are compromising our independence, objectivity, even integrity. This not only creates self-interest threat, this is creating a pressure on our work. Mean this also create intimidation threat as well. So we should not work on percentage fee or contingent fee. The fee should be fixed and decided before starting the work. Self-interest threat arises due to client-based remuneration. Our firm is providing audit as well as non-audit services to different clients. We provide audit as well as non-audit services. Our firm senior partner has stated in a meeting, we are conducting audit of so many clients, but we are unable to sell non-audit services to clients. So if anybody of you has convinced any of the audit client to buy non-audit services from us as well, you will receive 10% of the non-audit services sale amount. Now what we will do? We'll try to convince audit client to buy non-audit services from our firm as well. How we can convince client to keep him happy? How we can keep him happy? To accept his wishes. Whatever he want in audit, we need to provide him. If there is any misstatement, we need to say, okay, sir, it's fine, no issue. We are with you. Just buy these services from our firm as well, so that we can receive our commission as well. So this is client-based remuneration. Mean if audit team remuneration is linked with the client-based fee, so that is what self-interest threat. Because your income is associated with this client. And you will try your best to retain this client. You will try your best to get more income from this client by keeping him happy. So these client-based remuneration are disallowed for engagement partner. Our partner, totally disallowed. For audit manager and other audit staff, these are allowed, but if not significant. If not significant. But ultimately, it will affect auditors' independence. So for that, you should perform second partner. Independent. Review of working paper. Whatever the work audit team has performed, we need to perform independent review of working paper by any second independent partner. So if there was any issue, anything was lacking during the audit where he compromised his objectivity, so that can be identified and corrected before signing the report. Because our client, our staff is receiving client-based remuneration. So ultimately, there are chances they will keep the client happy. How they can keep the client happy? By affecting their objectivity. Self-interest arises due to conflict of interest. What we are doing, we are discussing different examples, different situations where self-interest arises. What is this conflict of interest? Suppose we are conducting audit of two clients. One is A, other is B. And they both are competitors. One is Pepsi, other is Coke. What's the issue? Through our audit staff, confidential information could be passed from this client to this or this to this. This means who will be losing in case of disclosing confidential information? Our client, not us. If we are working without any of the safeguard, any of the steps, we are working in self-interest. We are not caring about our client. So in that case, there could be issue of confidentiality. How to maintain confidentiality? We should maintain Chinese walls. In separate team for client A and separate team for client B. Not only Chinese walls, the staff should not be from same office. Staff should be from different offices. We need to arrange staff from different offices. Not only we need to maintain staff from different offices, we need to sign our written agreement with our staff. Do not disclose confidential information between client. These measures we have taken to maintain the confidentiality. But before this, we need to take permission from the client as well. We need to inform them, like we are conducting audit of both companies, you and your competitor. There could be issue of confidentiality that we are managing like this. Mean adopting these measures, we are maintaining confidentiality. If both client agree, okay, we trust you. The measures you have adopted, we trust you. continue, we can continue both. But if any of the clients say, no, there could be issues, we cannot trust you. You can disclose our confidential information to them. So in that case, we should resign from one client and continue with other. And our decision should be based on financial grounds. Financial grounds mean the client who is paying more fee, we should continue with them. The client who was paying less fee, we should resign from them. If we are conducting audit of two competitors and we haven't informed the clients, we haven't taken any of the strict measures to maintain confidentiality, so we are working in self-interest threat. It could affect our independence objectivity. Objectivity means our work is influenced due to our personal interest. Personal interest means we are conducting audit with the same staff so that we don't need to pay to the different staff members. Because the staff working on this client, they are having knowledge about the nature, they are having knowledge about how to conduct audit of this kind of company, so they can perform audit of other company easily. I mean, we are not trying to bear additional cost. So self-interest threat arises due to conflict of interest. Conflict of interest arises where we are auditing two clients and both clients are competitor. So there could be confidentiality issue. Conflict of interest arises if we are conducting audit of two companies. They are not competitor, but they are involved in any litigation with each other. There were two neighbors. One was shoe shop, one was cloth shop. They were having issue with each other. Now they have a filed sue against each other in a court. Again, there is an issue of confidentiality. Court could call us as a witness from any side to provide any of the statement, any of the information. So again, what we need to do, we need to adopt these strict measures to maintain confidentiality. Separate staff are both client. Staff from different offices. Written agreement with the staff do not disclose confidential information between clients. We should take permission, mean inform the clients. If both agree, continue both. But if anyone is not agreeing, we should continue one and resign from the other. Self-interest threat arises due to litigation with the client. If we are having litigation with our client, why? Client was not paying our previous fee. To recover fee, we file a case against the client. Now on one side, we are in litigation with the client in court. He's our enemy in court. On the other side, we are conducting audit. What will happen in audit? Whatever the evidence he is providing, we will say no. Whatever the evidence he is providing, will say not acceptable. Not acceptable mean our professional skepticism will be like this huge. Now in audit, we are focusing on personal interest, personal grudges. So now in that situation, we should resign from the audit. Otherwise, we are affecting our objectivity independence. So self-interest threat arises due to personal interest, due to financial interest, due to fee dependency, due to undue hospitality, due to referral fee commission, due to contingent fee percentage fee, due to client-based remuneration, due to conflict of interest, and due to litigation with client. Due to undue hospitality, there is a familiarity threat as well. Due to contingent fee, even client-based remuneration, there is intimidation threat as well, mean audit work is under pressure. Self-review threat arises where we are providing not only audit, we are providing non-audit services as well. We are providing accountancy or bookkeeping services as well. What is the difference between accountancy and bookkeeping services? Bookkeeping is just maintaining ledgers, while accountancy, we are preparing financial statements as well. Under both cases, self-interest threat arises. For listed audit client, providing accountancy, bookkeeping services to audit client is prohibited. We cannot provide. For unlisted clients, we can provide, but with the Chinese walls. Self-review threat arises if we are providing taxation services to the audit client. What we are doing in taxation services? In taxation services, we are preparing tax returns. Tax return is not a part of financial statement. It's not a component of financial statement. But there is tax expense that is calculated through tax return. And during audit, we are going to audit that tax account balance as well. So self-review threat arises. How we can avoid that? Separate team for audit, separate team for taxation is allowed, but through Chinese laws. Otherwise, there will be self-review threat affecting independence objectivity of the auditor. Self-review threat arises if, along with external audit, we are providing internal audit services as well. Who is internal auditor? Company employee whose role is to review internal control system. How he review internal control system? Through test of control substantive procedure. And if we are involved in review of internal control system, so we are aware what is internal control. During audit, might be we will hesitate to perform test of control. If we are not performing test of control during audit, ultimately we are affecting our objectivity. In some countries, like in some countries of Europe, external auditors are restricted to provide internal audit services to audit client. But if there is no legal restriction, we can provide internal audit, but through Chinese wall, separate team for external, separate team for internal, if there is no legal restriction. Self-review threat arises due to asset valuation services. Asset valuation. Our client was constructing his own asset, and he is lacking in accounting standard. So he asked us, can you please provide me help by applying accounting standard knowledge? What cost I should capitalize, what cost I should expense out. So this is another non-audit service where we will charge a fee. But the asset value will appear in balance sheet that we need to audit during the audit. What we will do, we will not verify in detail because we know this is value accurate. We have computed that. So asset valuation, in case of material asset valuation, if the asset value is a material, for listed audit client prohibited. If the asset value is immaterial, then we can provide asset valuation services along with audit, but through Chinese methods. So material asset valuation for listed audit client is prohibited. Self-review threat arises due to secondment of staff. Secondment of staff means our client, accountant resigned near to the year end. And now client need to prepare financial statements. He's unable to find proper person who can help in preparation of financial statements, preparation of accounts. So he requested our firm. Can you please assign any of your staff member for 2 months as an accountant to my company? If we are having spare staff, so we can assign and we will charge to the client. This is called secondment of staff to the client. You see, the staff who is working on client as accountant is member of our firm. He could be involved in auditing as well. So there is issue of self-review threat. In that case, what we need to do? Separate staff are audit and separate staff are other services, mean working as a client employee. Allowed, not disallowed. Advocacy threat arises if we are performing any of the function that is of company management. Like we are representing a client in any of the court case, not on the request of court, on the request of client management, we should avoid. Otherwise, there could be advocacy threat, because it's a function of company management to represent client company, not your auditor. If we are representing the client in case of share issue, we are dealing with the shareholder regarding company share issue. This is role of company management, not your. Be in your limit. If we are representing the client in case of any bank loan, we are negotiating loan terms with the banker. This is company management function, not your auditor. If we are representing the client to resolve any of the tax dispute against tax authorities, who should represent the company in case of tax dispute to tax authorities? Company management, not you auditor. This is not your role. If you are performing any of the client management function, that will create advocacy threat, management threat. We should stop providing these kind of services. Advocacy threat arises if we are providing along with audit. What kind of services? Advisory services. Business advisory services. Advisory services we can provide, but through Chinese walls. If our firm is having separate advisory departments, so we can perform through Chinese walls. The same staff we should avoid. Advocacy threat arises if we are involved in client recruitment of staff. Client want to appoint its finance director, and we are involved in recruiting that finance director. Client need to appoint any of the staff whose role this need to be performed. Company management, not the auditor. It's not your responsibility. But this is not directly prohibited. Auditor could have involved himself in staff recruitment of the client, but up to the extent of analyzing the CVs, conducting interview. He should not be involved in a final selection decision, because a final selection decision is of company management, not the auditor. So auditor could involve himself in analyzing CV, shortlisting candidates, conducting interview, but he should not be involved in final selection decision. Otherwise, it could create advocacy threat affecting independent subjectivity. Familiarity threat arises due to long-standing relationship. Due to long-standing relationship. Long-standing relationship means we are conducting audit of one client from previous so many years. What will happen? In last so many years, we haven't found any issue. We'll be over trusting the client. Our professional skepticism will reduce. We will not be performing detailed procedures because we haven't found any issue in last so many years, so there will be no issue. This could affect our independent subjectivity. So what we need to do? Key audit personnel. We discussed this term in very first lecture. Engagement partner or audit manager are called key audit personnel. They must be rotated of the audit every 5 years. They can continue audit of one client for maximum up to 5 years. After 5 years, they must be rotated of the audit, and other auditors should have been assigned to this client, not these. They should be shifted to other client, and other client key audit personnel must be shifted to here. Key audit personnel mean engagement partner and audit manager only. There is a term called key audit partner. Key audit partner is a partner of subsidiary in group audit. he can continue audit of one subsidiary up to 7 years. He must be related to the audit every 7 years. Key audit personnel every 5 years. Key audit partner means subsidiary partner 7 years. Key audit personnel can be called back, can be assigned to this client again with the gap of 5 years. But key audit partner can be assigned to this subsidiary audit again with a gap of 2 years. And these are two different terms, key audit personnel and key audit partner. In a single company, there is no key audit partner. Where we are having key audit partner, in case of group audit, the subsidiary engagement partner is called key audit partner. He can continue audit of one subsidiary up to 7 years. And with the 2 years gap, he can be assigned back to the client again. But in case of single audit, single company audit, there are engagement partner, audit manager, they are called key audit personnel. They can continue audit of one client up to maximum 5 years. After 5 years, they must be rotated. And after 5 years gap, they can be transferred back to this client, not before that. Otherwise, familiarity threat will arise that will affect auditor independence, objectivity, even professional skepticism. Familiarity threat arises due to family relation as well. What we need to do, if you are having close family member in client that is associated with the accounting, finance department, mean involved in preparation of financial statements, we must not be part of the audit team. We should assign any other auditor to this client. But the other auditor who is going to conduct the audit, he is a client of this, colleague of this auditor. He could influence the work due his colleague. So in that case, the second partner independent review of working paper should also be performed. I mean, not only we should remove the auditor from the audit team, the second partner independent review of working paper should also be performed. Familiarity threat arises not only due to family relation, it arises due to close friend relation as well. Engagement partner and company finance director, they were past colleagues in any other organization. They were attending a similar school in their childhood. They both are playing golf. They both are going to gym together. So this is what close friend relation. Due to this, even partner work could be compromised. The finance director can influence his work. Please avoid this misstatement. Please give opinion in favor of the company. Even in that case, we should not assign that auditor to this client who is having close friend relation with the client. Though we have removed this auditor, but the team who is going to audit, they are their colleague. In that case, second partner independent review of working paper should also be performed. Familiarity threat arises due to undue hospitality as well. What we need to do with undue hospitality? Significant hospitality should be avoided. Intimidation threat arises due to pressure, fear on auditor by the client or any third party. What we need to do? We need to resolve that fear or pressure by discussion with audit committee, by discussion with those charged with the governance. If still unresolved, we should consider withdraw from the engagement. Intimidation threat arises due to low balling. What's low balling? Charging lowest fee as compared to competitor firm. Sometime to get a business of any audit client, you try to charge very low fee to the client so that you can attract this client rather than your competitor firm. And if you have offered very low fee, that is called lowballing. And if you have charged very low fee without checking your audit cost, and if during audit you realize that your audit cost is more than your fee, what will happen? This fee pressure will force you to affect the quality of the audit. You will try to skip some of the procedure. You will try to assign less experienced staff so that you can remain below cost. And this is affecting your independence, your objectivity, mainly objectivity. What we need to do, if there is an issue, we should discuss with the client management, either to increase our fee a little bit because our cost is more. If unresolved, we don't want to work in loss, we should withdraw from the engagement. This is also another cost pressure. Lowballing is allowed, not disallowed, but there is some guideline that we need to follow. What is that guideline? We will study in next lecture. Intimidation threat arises due to second opinion. Is this second opinion? We were conducting audit of our client. There was some misstatement in the financial statements that we requested to management, please correct them. They said, do whatever you can, we will take second opinion. Second opinion means they will ask any other firm to provide opinion on their financial statement. If they are moving towards other firm who is our competitor, so there are chances that a firm will provide a different opinion than us. If they will provide different opinion, ultimately this will affect our repute. This means now we are under pressure of second opinion, mean other firm opinion. So what we need to do? We should try to resolve this issue by discussing with those charged with the governance. Please give us assurance you will not go for second opinion. If still they are threatening, we will take second opinion, we'll take second opinion, is all right, then we should resign from the audit and ask the client go for second. Because we should not work under pressure. Now, whether this second opinion is allowed for any firm or not, so it is allowed. If any client is asking for second opinion, it is allowed. But on the request of client only, we should not offer from ourselves. We should not say to the client, we provide second opinion as well. If you are unhappy with your originator, we will provide second opinion. No, this is not allowed. This is not professional behavior. In extreme cases, on the request of client, we can provide second opinion. If we are working in second opinion, we should never ever provide a different opinion as of other auditor. If his work is not negligible. If his work is negligible, then we can provide different opinion. But if your work is not negligible, we should not provide different opinion in second opinion as well. And if we are working in second opinion, normally we are having very short time to provide opinion. Could be 1-2 weeks. So what we need to do, we need to discuss our evidence with previous auditor as well. Because he has performed work probably in 6 months. So he will be having more authentic, more detailed evidence than us, because we are performing shorter work due to time limitation. So we should always discuss our evidence with the previous auditor, and we should not provide a different opinion if previous auditor work is negligible. We should not take initiative from ourselves to offer second opinion. If client requests, then we can provide this. I mean, this is not prohibited, but we should not take initiative from ourselves. We should not advertise these services. If client requests, then we can provide, but avoid providing different opinion if previous auditor work is negligible. If your client is putting pressure, I will take second opinion. So we need to discuss with top management. Please make sure you will not be going for second opinion. If they are not providing this kind of assurance, then we should resign from the audit because they might move towards our competitor firm. A competitor firm may provide different opinions that could affect our reputation. So, being auditor, we need to maintain our independence. But there are some threats on independence that we must reduce to an acceptable level. First, we need to reduce these threats. If unable to reduce, we should avoid. Avoid means withdraw from the engagement. Stop providing other services. How we can reduce? Through Chinese OAS, through discussion with the management, through keeping the fee below 15%. So we have covered so many examples relating to these threats. In next class, we'll practice some good questions. See you next class. Chapter 3, we have completed. Next class will be on Saturday. Whether we'll be having on a Sunday or not, I'll inform on Saturday. Otherwise, every Saturday we are having class.
Sir, at what time, sir? 6:30,
Okay.
right?
Yeah, 6 to 9 next Saturday.
Okay, sir. Thank you.